Toni Boucher.
Good evening, Mr. President. It's very nice to see you here today. Earlier we were celebrating for our country a triumphant day. Unfortunately, today we're celebrating something completely different when we're focused on the state of Connecticut and the state of its economy. As was mentioned just previously, we're celebrating May 2nd as the latest in the nation tax-free day. That's not something we need to be proud of. It's not something we want to exacerbate. And in a recent commentary that someone provided me talked about celebrating 20 years of zero job growth, higher taxes, and a fading future. I don't want to think that way, because I think every single person in this building is here because they really believe in Connecticut, and they believe that we have to recreate an environment where businesses can grow and families can prosper. And I do believe that tax policy and the Finance Committee is one of the most important committees we have, because it can that tax policy can help Connecticut grow, or it can hurt our economy, because money is a great motivator of human behavior. Unfortunately, runaway taxes and spending have a damaging effect on our state. And it has shown, because in the 20 years since we've enacted the state income tax, we've had no private sector job growth hardly at all. In fact, our high point was 1989. And no other state in the country has fewer private sector jobs in 2009 than in 1989 than the state of Connecticut. This is really a problem for us. The state isn't growing in private sector jobs, and that's where the high quality of life for its residents and for its young people is provided. And we have plenty of information, in fact, from our own offices that give us legislative analysis, show that we have a huge loss in the 25 to 45-year-old category in Connecticut. That's our primary earning residents and public. And over this period of time, we've also seen that our population has remained flat, as that job growth has remained flat. However, not so in state government. And it is a dangerous predicament to be in when the very single largest employer is the state of Connecticut itself. As our revenues over that period of time have grown 5%, our expenses have grown 28%, and our population in our state employee group has nearly doubled. It is not sustainable. This budget doesn't really directly challenge that. In fact, this proposal of over $3 billion in increased taxes is on the heels of a $1.5 billion tax increase previously enacted. Raises our state income tax that used to be the envy of our country and our region to 6.7%. And there's even individuals in this legislature that want to take it to 7%. It wasn't good enough. In fact, they wrote a letter suggesting that we increase it even higher, just as we've heard other states have gone about reducing it because they know they're in a competitive environment. And so many reports that we've had show, in fact, the only state that's really growing in New England is the state of New Hampshire, who has very favorable tax policies. Just ask some of our seniors of what they'd like to move and what they're looking to do in the future. We also want to raise the estate tax in this budget and eliminate tax exemptions on clothing. We want to not sunset the real estate conveyance tax. And we're 50 out of 50 in business-friendly environment. I hate to see these headlines, and we've seen them. We've been provided them. Our friends and neighbors and constituents will email them to us on a regular basis. It's either in some Forbes magazine or Wall Street Journal, New York Times. The nation's highest total state and local taxes, $7,000 per capita. The second highest unfunded pension liability. Another thing we haven't really discussed at length here, including an unsolvent unemployment fund that is going to be directed, I'm sure, at our employers once again. The fourth highest state debt, $7,882 per capita. 45 states have fewer health care insurance mandates than Connecticut. We have the second highest gas tax going towards maybe the highest, again, because instead of repealing the entire gas tax increase, we are keeping our percentage tax, our gross receipts tax, climbing even further, especially given how high our fuel taxes are today. And there's too many publications that come out with the reports of least friendly to business, highest electricity tax, and again, a 9.1 unemployment rate, higher than the national average for the first time that anyone can remember. In fact, losing 6,000 jobs just in a previous month, when there have been proposals on the table to close this gap without one increase in taxes. And when you're looking at a reduction in staff, you're looking at maybe 1,000 or 1,300 per year in the next 2 years. When you're looking at a state that has faced 100,000 job losses, many within the company that I work for when I'm not here as well. This is really difficult. And we don't have to look around. I mean, don't have to look at the big companies, but we can look at Pfizer and Hamilton and others that have been reducing staff between 200 and 1,000 just in the last recent year. When we look at some of the components of this, and we talk about wanting to be open for business, one of the things that concerns me the most are a large tax, the corporation tax that was put in as a stopgap that was supposed to sunset this year, of the corporation tax of 10%. Not only does this budget extend it rather than sunset it, it increases it substantially. And it flies in the face of being open for business. And how about the perennial $250 business entity tax just for existing, not necessarily for doing business? There are other areas of this budget that give us a great deal of concern. We're going to talk about the estate and gift tax because that's something that I really feel we have concrete information that really shows whether people stay or leave, and we have good, solid data on it from our own Department of Revenue Services. The luxury goods tax, a lot of people kind of skirt around that. They're worried about, talking about a tax that possibly is geared towards those that are more affluent in Connecticut. By the way, those numbers of more affluent that this budget depends on are getting fewer and fewer. A lot of the demographic studies that I've been reading show that Connecticut in general is losing population at a much higher income and gaining the population that fills that gap of them leaving at nearly half of the income levels that we had previously. But this luxury goods tax is a concern to me because it is one of 2 or 3 taxes that differentiates Connecticut right now in this proposal from any other state in the union. We don't want to be seen as the least attractive in categories, whether it's the only state for an electric generation tax or the only state for this luxury tax. Now, I do see here it has been reduced from 9%, the original proposal, to 7%. But nevertheless, it still sends a message. And although it may not hurt the individuals that buy these goods, it certainly hurts the individuals that work in those areas. We saw that so clearly when the national government decided to put in a luxury tax on yachts and boats. And it was easy to say, well, we're going to tax the yachts. That was in 1991. What happened during that time was that the entire boating industry took such a hit that the individuals that work in that industry, the carpenters, the painters, the individuals that rent the facilities, that lease it, were the ones that were decimated. And within very short order, by 1993, just a year and a half later, it was taken out because the industry was so affected. So when you're targeting an audience, you have to consider those individuals that work in that area, that business sector, and how it impacts them, the individuals at the lower end of the income stream. The sales and use taxes that are in here do, however, reach all categories of individuals. And I know it's uncomfortable for many individuals on all sides of the aisle. We can laugh about some of them, such as, pet grooming services or limousine services or cosmetic surgery, which, again, as I mentioned earlier, was an interesting exercise that other states have dabbled into and found that the return wasn't very high because, in fact, 69% a reduction in their anticipated revenues in New Jersey because, in fact, it was not a mandatory procedure, but it was elective. And when you do something that's elective, if it becomes too onerous to do, people will reduce their consumption of it. Yoga studios. The things, though, that do bother me are clothing and fabric purchases and yarn for people that actually make their own clothes, or the tax on food, tax on non-prescription drugs such as Bayer aspirin, over-the-counter cold remedies, or so forth. These are things that affect everybody equally at all levels of the income stream, and do give me pause. Now, as I say this, I do and am pleased that, in fact, this does not do the irresponsible things that we were engaged in previously, and that is borrowing, for operating expenses, which was not a process you wanted to continue. It tried to keep our towns and cities intact. All of the proposals did that, including the Republican proposals. However, I did not see any language in here yet to talk about the legislature voting affirmatively on union contracts, or giving necessarily, well, there might be something in here on rescissionary powers, greater rescissionary powers for the executive branch. I call your attention again to looking at this a little bit more closely and reconsidering the various one-of-a-kind taxes that Connecticut would be engaged in, such as the luxury taxes and the tax on electric generation, and as well as the gross receipts taxes, which are different than other places. We don't have just a 25-cent excise tax for your gasoline, and the removal of an increase there pales in comparison to that percentage tax that is slated to go up to 8.1%. Imagine how that will impact us when fuel has gone from $2.50 to now it's reaching over 4%, and some have even predictions that this summer we could be at the $5 price per gallon, which would be devastating for a lot of families. I know it's already affecting my family. I have young children that are out on their own, and they've decided they can't come to visit that often on the weekend unless we slip them a $20 bill for the extra gas it's going to cost for them to come over from New York. And so that has really cut into their disposable income in a very, very big way. Now, there are going to be some suggestions, hopefully, that will certainly help later on this evening that might give you all an idea that we can maybe do this without going back to our old ways. I pointed out earlier that a bad direction is to take a sunsetted tax and expand it and continue it. And I'll tell you that is because the public is very suspicious of us. When we enacted the real estate tax, it was to be a sunsetted tax. And this year, finally, they gave it up. They gave up that promise and basically said, well, you're right. It's become a permanent tax now. We're going to extend it, and we're also going to increase it. So that is a problem. Now, the issue I have with the income tax is that the vast number of people in our district do not understand that this is a retroactive tax, meaning that it is going to be assessed starting January 1, 2011. Now, when we finalize this budget, somebody's paycheck, a lot of people's paycheck, if they work in Connecticut, is going to see a great big fat deduction. And it depends just how much it's going to be for them, that a good portion of their paycheck may be much less than what they had anticipated. So that is something I think we're going to need a great deal of attention to, and some publicity around that so individuals aren't caught short. There is no question that in Connecticut we have an imbalance. We have an imbalance in many ways. We talk about our educational gaps, but we also have a gap in who pays the vast percentage. And every year we get to a point where there are fewer people paying taxes on one end of the spectrum, and a much larger dependence is on top wage earners. Right now, we have the top 6 income brackets paying nearly 50% of the taxes of Connecticut. And worse yet, a quarter of our state paying nearly half of our taxes. That dependence on that small group leaves us very little wiggle room, because just losing a small percentage of that will make a huge difference in our revenue projections and whether those will hold up. So I think that we should be very cautious about how we go there. We get the sense that from a lot of folks on our end of the state that talk about being the ATM machine for the state of Connecticut and are getting pretty upset about it. And they do have options, and I've gotten so many emails from so many. I do have some border towns that I represent, and some of them were just, although they could afford it, were so annoyed at some of these taxes, they said, just for the point of it, I'm going across the state line to have my haircut when you had a haircut tax in there, or better yet, many of the other things that we were talking about here. They're really, really steamed. You should also note, however, that a good portion of these taxes do fall on the $50,000 a year individuals to $100,000 a year. And for those couples, combined income of $100,000 or more, this adds to their already tax bill nearly $1,000. So we better be ready for the phones to start ringing and have a good answer for them. I hate to end on such a negative note, but I think you're going to be very happy with our suggestions for closing this gap in a way that would not be so painful, in a way that would promote Connecticut and would really mean that we are open for business and that we do want to keep people in Connecticut and attract more, particularly our young people. And they're only going to come here if we provide them with the right jobs. We can give all the incentives we want for business. We can give them all kinds of deductions and credits. But the bottom line, this is the bottom line, you can't tax your way to prosperity. By keeping more disposable income in someone's back pocket, they can go to a store or a restaurant and spend that money and thereby increasing the revenues for that retail establishment, and then they can hire someone else. That's the dynamics, folks.